Hello, everybody. Welcome to Thursday. The S&P 500 was up 0.6%. Good day. All the indexes were up that I follow, and not a bad day altogether. Although, yesterday was down, the day before that was up, and really, for the most part, this week has just gone sideways so far. There was some good news. The new claims for unemployment dropped by 14,000 for the week, and so that was good. And we're looking for tomorrow's big jobs report. They're expecting about 800 plus thousand new jobs to be created that'll be announced tomorrow morning. And so I think that's partly why we're going sideways. As we mentioned before, one of the big issues here is the possibility of inflation, or maybe even now with the Delta variant, things going too slow. And so the number of new jobs that are created is quite important. And I would say, honestly, besides the Federal Reserve, in terms of, importance to what's happening to the market, what's happening in the labor market is very interesting. Got all of these jobs open and you don't have, everybody taking them. And so how does that affect things? So that slows things down a little bit, which can be okay because we're worried about inflation. And really, if you look at what's happening right now, you've got one side that's talking about things could go too slow, another side talking about things could go too fast. And I have not seen, a trend that's lasted more than a day. So last year, for example, if you had clean energy for periods of that year, you would see it go up above, say, a higher rate of return than the S&P 500 day after day after day after day. This year, when you look at different areas, what growth or value or small cap or large cap or any of these different types of, pieces that you might look at as a segment, I haven't seen anything last more than a day. Now, it might come back down and go up the next day or what have you, but that's a good reason to own kind of everything. So inside of our traditional model, we own everything. We have, 4 targeted pieces, which are also pretty broad right now. And our ESG models, we don't own everything because there's an ESG screen in there, but we own as much as we possibly can in there with again, 4 targets that are quite broad themselves. So altogether, I think that's the only way to go when things are moving around like they're moving right here. And the majority of what you'll see in those broad areas are these really high quality companies. That's one of the things that I think that's happening right now, because people can't tell where things are going. They're just buying quality. You would buy an Apple and a Microsoft and a Google and those types of things just because they have lots of cash flow, great name recognition, and lots of cash on hand for that matter. Not that people are expecting kind of, a big calamity or what have you, but just because it's uncertain to where things are going to go. Is the reopening really happening? Is it not really happening? All these different things that are going on. And I think we're just kind of dealing with some of these cross currents. So I've been very pleased with how things have been going in that kind of broad market area. And it took us a little while to get there this year, but that's been something that's worked out quite well. So, look forward to seeing you tomorrow. We're doing Talk Money with Tom again from 12:15 to 1. If you get a chance to join us, you can ask some questions and we'll be able to, I do a summary for the week at the beginning of that everybody can see. I do send out that summary for that too, so that you can see that through the email also. So anyway, look forward to seeing you tomorrow and I'll talk to you then. Thank you very much.